Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Busy day. We've got earnings to discuss. We have to discuss Berkshire Hathaway's stake in Amazon. Not a Warren Buffett pick, but a Berkshire pick nonetheless. We're going to talk about the crazy opening day we had yesterday in Beyond Meat. And we also have the jobs number coming up here. And our guest today, John G. Inch, senior analyst at Gordon Haskett. He will break down GE for us at 8:35. What's the word here, Joel? Overnight.
We have a strong overnight session. Pre-market low just below your close of 29.17. That low is 29.1650. That's your big number on the downside. On the upside, let's see what happens at yesterday's high at 32.75, and then things really open up on the upside to at least 27.42. That's the area of a couple closes earlier in the week. Crude trying to recover, but not doing a very good job. Up 4 cents at 61.85. Gold flat here at 12.72. Silver up 7.3 cents at 14.69. And Triple D, are you sitting down? Bitcoin up $320 at 5,710. And before we talk that, I got a trivia question. What happened 35 years ago today?
35 years ago. What would that put us? Back to about 1984. 84? 84. What happened in 84?
On this
Tigers
day,
won the World Series in 84.
That's true. That's true.
Well, what happened? That wouldn't have been right now. Oilers won the Stanley Cup. Man, those were
you're
the
talking
good days. That was a good year, 84.
It was a
my
great
baseball
year.
team won and my hockey team won.
Okay.
And I was 8 years old. I didn't appreciate it at 8 years old. What happened?
That was 73 Secretary. That's the day I met Lisa.
Oh, very nice.
I don't remember the stuff like that. I'm not a sentimental guy, but I remember
Talk
that.
about your first date with Lisa. What happened?
Let's not talk
That's
about
an hour show.
Let's not talk about that.
Let's not talk about that.
Wait.
All right, we're not going to get that first.
Swale won the Kentucky Derby that year, and I couldn't bet on it. They didn't have off-track wagering.
Well, we'll get to the Derby stuff at the end of the show.
We'll do his annual Derby talk here at the end of the show, so you guys stick around. 8:55, it'll be Derby time.
Real quick, though, on the Bitcoin, is that up, you think, because Facebook is reportedly launching their own crypto-based payments thing? Do you guys hear about that?
I didn't know that.
Oh, okay. Yeah, they're, according to the Journal, they're working with some financial firms to launch some sort of crypto platform that would allow people to make payments through Facebook and stuff.
That's interesting. No, I don't know. I don't know why it is, but all right, let's.
You know what? On a technical basis, it's the only thing we trade Bitcoin. It's hard to be bearish here. I mean, the thing is held 5,000 now. I think it's going over 6. So, and we've kind of been bullish Bitcoin here for a while. I don't like the long-term story here still, but from a technical basis, just looking at the charts, I'm not sure if you can bring it up here or not. But last time I looked, I was like, it looks still bullish. And really, if you're trading it, that's really what you can use is just technicals. So I think it's going to go over 6,000 yet. So I'll keep the bullish Bitcoin hat on here, at least temporarily. What do you think, Joel? I mean, technically it looks pretty good. You're going to come into some serious resistance, 6,000, 6,300, but I think we're going to 6,000. Another 300 up.
I mean, that's only $300 from
here.
Still,
though, that's 6% move.
I mean, it's turned.
Tradable. That's a tradable move.
Turned, right? It's turned, and what was also nice.
So. Yeah.
The nice about the technicals on this is it when it had these breakouts, it comes back to the to the levels and kind of tested it, right? And so that's what it did. Boy, looking at the monthly charts on the futures here, let's see, what do we have on the monthlies? I see a high of 61.42. That was back in December of 18, so that was on the way up. It won't be quite the same ride that it was before. But you know what, man? The SIBO, they dumped the contract at the wrong time. Theirs goes off.
I think they did.
They did. But okay.
Starting to get some life. It's got life.
It does.
So if I was a Bitcoin trader, I would not want to be short it right now.
All right.
I'll leave it at that. That's my Bitcoin talk, but I'm not a Bitcoin trader, not a crypto trader. I'm an equities trader here. And I took yesterday off. That's the first time I took a day off in a long time. I was literally in bed most of the day. It was a pretty bad stomach flu. I'm feeling somewhat better here today. But that being said, I have no overnight positions because I didn't trade last night. So it's weird to come in and not have any overnight positions. Obviously, I have my long-term investment portfolio still, but in the trading portfolio is empty. That's a weird feeling.
Huh.
0 trades on right now.
Well,
0 trades. I will have trades on probably by the open, but right now 0 trades.
All right, Spencer's going to.
So you guys got to help me out and tell me what's going on.
Well, you should start buying Amazon this morning because that's what a Berkshire.
Should have started buying Amazon last night.
Yeah, that's what you should have.
If I was sick and laying in bed and moaning and groaning, I would have been buying Amazon because it came out last night, this news. And what? Give us the news here.
He's so casual about it, Warren Buffett. He's talking to CNBC. He says, yeah, well, one of the fellas in the office that manage money, they bought some Amazon. So it'll be in the 13F. I didn't buy it, but Berkshire bought it. So it'll be in the 13F. That's next week. Actually, the 15th is 13F day. But
one of the fellows.
One of the fellows. Just
we don't know who bought it. Just one of the
we
fellows.
We don't know who. We don't know when. We don't know how much. But
I like that. One of the fellows bought some Amazon for our Berkshire Hathaway portfolio. And you know what? The market likes it too. Up 40 points here. And that is all thanks to Mr. Warren Buffett's commentary to CNBC. Stock trading up. I mean, Warren's behind it. I don't see any reason why you get off the Amazon train. The trend is your friend. This thing looks like it wants to make new all-time highs to me too here. I don't own it. It's always been a valuation issue for me here. But anyway, in any regard here, you can't argue with the technicals. This thing looks like, we're going to get a little challenge here. Maybe Joe's going to find us a level of resistance for the short term, but I think we're going to make new all-time highs on Amazon.
If I was interviewing Warren, I would have asked him, is it the same guy in the office that bought Teva?
Because that didn't work out so well.
Right.
Teva 21-22 did not work out so well. Amazon is not Teva. I will say that.
Okay. All right. Interesting move here. We're right back to the highs of the move. The highs of the move, 1956.34. We're a couple 16, 18 points away from that. So I'll use that as resistance. It's going to fade at some point today. I don't know if it's going to fade from 1942 or 1950, 1960 or whatever. But there's some people that probably got caught in this little downdraft under 1900, especially if you were thinking, oh, my 1920 calls are worthless. Now they're, $22 in the money. So we'll see. One number only is what Dennis likes, and that's 1956.34.
So we'll find out. We'll find out next week how much they've bought, because all we know is that.
And you know what'll happen? You'll see the news algos on the 13F disclosure that a new position for Amazon. You'll see Amazon pop again because of the news algos. Probably will be a fade though, because it's already priced in. We know that. Probably. But how many of those news algos do you think are going to actually reprogram themselves not to buy on the 13F disclosure of Warren having a new position?
Don't know.
Quick question.
I bet on the 13F disclosure, when you see that day coming out, let us know which day that's going to be, because I want to be long Amazon.
May 15th. May 15th.
Is it May 15th? Is that? But Warren, does he give the same days always too? It's May 15th.
That's 45 days from the end of the quarter.
That's when they have to do it.
That's when they have to do it by.
So they could be like May 14th. Sometimes they start popping.
It could be
early.
May 14th.
So May 15th is like the deadline.
Yes, that's the deadline. After the bell. That's the deadline.
Excellent number. Write that in the calendars here. Amazon will get that little news algo pop. I'm going to sell to those news algos.
Okay.
Look at this. We give you a trade 15 days in advance. Moving on.
Mission Gearhead asked a question, is there options on Bitcoin? And I don't think there are, but if you want to trade Bitcoin, but you don't want to get a Bitcoin account, there's this GBTC that I've been looking to buy since $5, but I haven't. So it's kind of an option.
What's that other one, stock that used to trade? Overstock. How's that thing doing?
It does
move with it a bit, though.
It's just let's see.
It's up this morning.
Yeah, I don't know.
You know what? It seems to get, it's like a good day trading stock for it, but after Bitcoin just fades for a couple of days, this goes straight down.
Yeah, exactly.
So like when the Bitcoin gets a pop, it gets a pop, but then it gets it back as Bitcoin's trading flat. So that's why it continues to lag, and obviously been a dog. But I don't know. I mean, if you think crypto's coming, remember it was all about overstock when we had the huge crypto rally in 2017. Stock went from like $14 up to over 80. It was an impressive move. I think it's $13
what was
now.
The other? Let's just do quick blockchain stocks here. What was that one that went crazy?
Are any of them left?
Yeah,
They're all gone.
Well, I'm trying to look up real quick when
was it Riot blockchain?
Oh, Riot.
Where's that?
I'm trying to look up when the when Overstock's blockchain platform launched T0. I think it was January. It was January 24th of this year. It was late January of this year when Overstock's blockchain platform. That was a big part of the Overstock Bitcoin thesis, was they were creating their own blockchain platform. So end of January.
What about that long blockchain stock? Remember that one? It's gone, eh?
That
went off the board. Man, that just shows you these little hype stocks. The thing went at like $120 or something.
That was LBCC, and
it's gone.
That's gone.
Yeah, that blockchain hype, that didn't last that long.
We hardly knew you long blockchain. All right, moving on to
Long Island iced tea to long blockchain.
Look at that, Longfin. Remember Longfin? Is that
some people lost some money on that one? We warned you on that one.
Yeah,
we got that one right.
Okay, all right. Mara is
Long Island blockchain ridiculousness. Okay, moving on.
Kodak. What about Kodak?
Yeah, Kodak.
Oh yeah, Kodak. What was that one? They were going to change to started taking pictures using blockchain. It's back down to $2.
No, it was pay for pictures. But anyways, come on, let's do.
It did have the big pop. Look at the weeklies. You can see it there. It went from like 3 to like 14 that day, and it came back down. They always come back.
All right, people are eating something besides fake burgers, right? What are they? They're eating Shake Shack.
This Beyond Meat thing.
It's Beyond Me, right? I mean, it's Beyond Me.
To infinity and beyond. Holy cow, $69. So it's off the pre-market highs. Believe it or not, this thing's actually trending down this morning because this thing got what, $79?
$79.60.
Holy cow. How do you trade this? I don't know how to trade stuff like this. This is above my pay grade. I don't get paid anything trading stuff like this. Yes, you can make money very fast, but you can lose it very fast. I have no interest in trading this thing on day one of the IPO. Go anywhere. Go to the blackjack table, throw it on red or black. It's the same thing, in my opinion. It's hard to trade this stuff.
Yeah. 79.60. You're in a retreat here at 68.99. So there's your support comes in at the open 40. It opened at 46, tick 45, 72.95 high. We just traded up to 79.60. A little early to figure retracements in this one though, so that we'll give it another couple days to trade. But what I was referring to was Shake Shack,
and they had earnings.
Oh, there you go.
They had earnings after.
I know. So every burger, not only the vegetarian burgers are hot, but the original, the meat burgers are hot here too. Shake Shack.
Yeah, the Q1 adjusted EPS was in line at 13 cents. Sales, they beat 132 versus $126 million estimate there. They also raised their guidance for the fiscal year. The fiscal year sales guidance was raised from $570 million to $576 million on the low end of the range there. And they didn't give Q2 guidance, but a strong Q1 and a fiscal year guidance raise for Shake Shack.
Joel?
Pre-market high comes in at 69 even. It hit there on 2 different occasions, so I'll call that resistance for now. Bases the monthly charts. If you want more than that on the monthly charts, you're going to have to hold out for $70. Let me see.
Man, that's a big level.
Yeah, that's a big level. When did it trade? Oh, 3 monthly highs in that area. Yeah, no, 2 monthly highs. So if you don't want out at 69, see what happens at 70.
Yeah, this is a big level here, and already coming off from the 69 high there, so I'd be very cautious. I mean, if you take out 70, maybe the rally continues here. Again, valuation for me on this thing is just insane, but we know valuation doesn't seem to matter in this market, at least not right now. So things can go anywhere, but if we're trading technically, $70. Major overhead supply, major resistance up there.
All right, let's
keep going here.
Yeah,
keep going. Get to the destruction of my investment portfolio here if you want.
Okay, you want Activision? I'll give you.
I've had a bad earnings season in the long-term portfolio. Lucky I can laugh it off because it is long-term stuff, but the trading has been excellent. I've had a pretty good month trading. I tell you, my long-term invest portfolio, every single one of my stocks that reports misses or goes down on the report. Started with Intel. It's been like 4 or 5 bad ones in a row. Maybe it's selective perception, like I'm ignoring the Apple beat, I'm ignoring the Twitter beat, but the Activision Blizzard, obviously not, good here either for my investment portfolio. Trading down $2. Give me the details.
Yeah, the Q1 adjusted EPS 78 cents, sales $1.82 billion. The Q2 guidance that they gave, EPS 35 cents, sales $1.3 billion. I think both of those were a little bit light. They also cited the fact that the cost to buy teams for their league is higher than they expected. The cost of a new team is rumored to be as high as $25 million per team in this Call of Duty league that they're starting. But there we go.
Big range on the report, snuck over $50. You know, that had to be at just a psychological level since you hadn't been up there in a while. 50.48, and they turned around on that same bar. They made a pre-market low at 46.51, and I'm looking in the 46 handle, and I see a low, 46 handle. You got a pair of lows at 46.04 and 46.14, another low at 45.5. So I don't know. I mean, it's off the pre-market low. Yeah, it has support. You know, shorts are probably, saying, okay, I hope this really goes back to 45 today. So if the shorts don't come in early and just get this thing under, 46, 45, 44, I think you'll see a little bit of demand for this on the buy side.
Yeah, I'm sticking with it. I have in the long-term portfolio. I'm underwater. I almost go back to even yesterday. I'm in right around $50, and the thing got up almost to $50 prior to the report. Back down though here again. So I've been in this for a while, sticking with it. Again, Pachter was on our show about 2 months ago saying he thinks this is a double in 2 years. I know that Michael Pachter sometimes gets it wrong, but he sometimes gets it right, and he knows a lot more about this company than I do. So I like going with the analyst sometime. That's why, we got Inch on the show talking GE2, and once Inch gets bullish GE, I'd get bullish GE2, but I don't know if we're going to see that. We'll see that at 8:35, what he's going to say. But sometimes it's good to go with the analyst, sometimes not. I'm sticking with Pachter on ATVI.
Right.
What about WW here? The company formerly known as Weight Watchers, though
I wanted to buy this into the report just because it looked like it was ready to go. And and here it is. It's going WW. It's changed ticker symbols.
They changed their name.
And now it's hot.
They changed their name. I don't think anybody actually calls them that, but that is their new name. It's WW.
WW?
Yeah, the company formerly known as Weight Watchers.
They don't call themselves Weight Watchers anymore. They just call themselves Double W.
Yeah, WW. That's
why do they call themselves Double?
No, WW.
It's too many W's.
Okay, Q1 EPS.
Double W. I like Double W.
Okay, you can call Oprah. Q1 EPS 16-cent loss.
I saw a Weight Watchers commercial this morning with Oprah.
All right, Q1 EPS 16-cent loss versus a 27-cent loss estimate. So they beat that number. Sales of $363 million is in line with the estimate, but they raised their fiscal year EPS guidance to $1.35 to $1.55 is the range. Although I don't have the original guidance that they had given, but it was a guidance raise.
I don't know. I like I said, I wanted to actually buy it ahead of the report. I thought about doing it, but I did not. Mistake. Stock's up 15%. This thing's got a pretty high short interest too, does it not?
Oh,
Spencer Israel?
Yeah, I don't know. Let me check.
I'm just going from memory, but I thought it does. And when you see these stocks and they're up 15% on earnings, they can continue if they have. And you get into that gap area. I mean, you got some numbers, 2260, but you're going to get into a gap. And some funny things can happen in a gap. Let's just go look up the short interest. It's a race. Joel, break down those technicals while we find that information.
I'll tell you, I was thinking about this thing too. Lisa is a health conscious person. She was talking. She's actually Jeremy Newsom's doing Health Month for May, Dennis. You should probably tune into that. You won't be sick all the time. But I
ran 12K 2 days ago, and then I got sick. So I got punished for running 12K. 12K is like 7.5 miles.
That's crazy. I can't believe you did that. But anyways,
I ran 7.5 miles. That was a pretty good run. I've been running pretty good. But then I got sick that night, so I got punished. I can't run that far.
Don't work out. But anyways, he's doing Health Month, and she's going to come on, and she was talking about stocks with them. And, he mentioned Weight Watchers, and she said that's the best program out there. I mean, I know the stock's gotten killed. It's had a crazy rally. But it's gapping into a gap area.
I mean, it's cheap, isn't it? Isn't like what do they pay? Like $50 a month or $20 a month or something? It's all online, right?
I don't know.
I don't know how it works either.
$24 is your pre-market.
Maybe I should sign up. I could get under 200 pounds.
Oh, man. I don't know. It's gap into a gap area. So this is where my technicals don't mean anything. So $24 is your pre-market high. I look continuation through that area big old gap to fill the 29.40. It's not going there today. So I don't know, maybe be patient and see if it drifts back down to the top of yesterday's range, which I'd also don't think is going to happen with the short interest at 20.35. So just use that pre-market high at 24 bucks as a target. See what happens after that.
Just thoughts here. What was short interest, Spencer? Did you find it?
I couldn't find it.
Okay, one platform said 15%. I think it could be higher than that, though. That was an old number. Anyways, I think this is one, just caution to anybody who says, okay, it's going to go right back down, because this was kind of set up. I think shorts were squeezing a little bit. I think they're going to squeeze a little bit more here today. So you get into that gap area, thing could run further. If, I'm not saying go out and buy it up 14%, but I don't think it's necessarily short here either. I'm sitting on my hands on this one.
Okay. All right. S&P's hanging out near the high of the session, up 10 1/4, 27.75, and that also happens to be your weekly number for me, the weekly pivot. So indecision here going into the report.
All right, let's talk about, well, here's one that we were asked about yesterday. We weren't super positive on U.S. Steel, and lo and behold, they had a really good quarter.
You know what? Some of the stocks that, and this is all about expectations, right? And we're starting to see it happen. Stocks that are running up, we saw this last quarter too, stocks that are running up into the print are getting hit sometimes, and then more often than not, it seems like stocks that are selling off into the print, meaning into the earnings report, are rallying. And X is going straight down into the print. I mean, it was down ridiculously, really, in the last 3 days, 16 to 14. Big sell-offs in the print, people nervous. You're getting a lift. So expectations, very, very low for U.S. Steel. And obviously, maybe they beat those lower expectations. Weight Watchers, kind of same story. Wasn't selling off into the print, but it wasn't doing well. I mean, you look at it, 2 months ago, $30, $20. I mean, expectations are lower. So sometimes buying these stocks when they're in the gutter going into the print has been making some money.
Well, they more than doubled their earnings per share estimate at 40. Let me find it real quick. I just lost it. 47 cents versus a 22-cent estimate. Sales are 3.49 versus $3.34 billion. So that's a very strong EPS print in the first quarter. Any insights, Joel?
I'm just all over the place here. I'm looking.
We're back to U.S. Steel.
Okay, X. Okay, now someone's asking about AMD. Let's do AMD next because this person's asked a couple times.
Sure.
Well, I was looking at X, and the pre-market high is at 1535. And I figured, I'll go to the dailies and see where the 2-day high is. The 2-day high is not the 1578. And then I just call it 16, but there's really nothing up there until 16 bucks. Three highs between 1578 and actually 4 highs between 1578 and 1598. If it gets there, I mean, it hasn't even taken out the second lowest close of the move at 1527. So, people are looking to get out of the mark from 2 days ago, 1527, 1560, or a couple other marks, and then major resistance at 16.
I don't think X is turning it around on this, but again, you can see a little short squeeze maybe this morning. You do have room to 16, but again, this is a dog, and maybe nothing more than just a little relief pop that they didn't really, do anything disastrous in the quarter.
All right, just real quick technicals on AMD. It faded off its earnings report. It made a high at 29.15.
Yeah.
So I'd like to see that get taken out and then challenge.
Good day for yesterday.
Yeah,
though.
good day for it in a bad market. Yep. So there's your resistance. On the support end of things, you did you fill the gap at 2609? Let me look real quick. No, you didn't, but there's trio of lows at 26, let's call it 2680. So right there, 2680, major support, major resistance, 2915, and then the Google chip high was 2995. So there's a quick breakdown of AMD.
I mean, when we used to talk crypto, we used to talk AMD and NVIDIA with moving with crypto. That obviously is not the case anymore, and we know it's a very small portion of their overall revenue. But, I mean, it's not going to hurt them if the crypto trade starts to come back into play. So something to think about. I mean, AMD, everybody's obviously pricing it like it is eating Intel's lunch. Maybe it is, and I think it's still in favor here. So buy or pullbacks in AMD, I would say if I was long, I wouldn't want to see it trade below. Go to yesterday's low, even 2661. You want to put it on for a trade? Maybe you get around 28 on a little pullback or something this morning. I think if it takes out the low of the move, which is the recent move, 2661, I would not want to be long. So that would be my stop out if I was playing it from the long side. But I could see a bullish trade on this.
All right, 5
Next.
minutes, 5 minutes before the jobs number here.
Oh my goodness, you guys had jobs number. Man, I take a day off and I'm all behind on everything. I totally forgot about the jobs
Well,
number.
that's why I'm warning you. So let's do CBS, the network, not the pharmacy. CBS Q1 adjusted EPS of $1.37 is in line. Sales 4.17 versus $4.3 billion. So a little bit weak on the Q1 print there, and that's what I got on CBS.
Just
No merger
movement here at all.
No merger announcements with Viacom.
Yeah, this traded just kind of down slightly last night, but not moving much at all here. I don't know what to say. There's still a media play here. I think some of the media stocks are still undervalued. Is CBS one of them? I don't know. I'm wishy-washy on this one. No opinion.
$50 is support. Your low from yesterday was $49.93. You had another low at the 50.16. So I like 50 for support, and then let's just use 51.27 as resistance, minor resistance, as that was yesterday's high. I do see if you get closer to 52, though, I see three highs right up there at the 51.85 area. So there's your support and resistance in CBS.
We'll do a couple more here before the jobs number. Gilead Sciences had earnings yesterday after the close. Q1 adjusted EPS $1.67 versus $1.61. Wow. Estimate sales 5.25 versus $5.3 billion. Good Q1 numbers, and they reaffirmed guidance.
I heard you in the background there, Joel. Nail on the head. I completely agree with you. This is just a dead stock. This is just dead money. I don't know what's turning. Biotech does not look great. So we talked about this on the show a few days ago and saying that biotech, when it had that little bit of rally, that it looked like it was the selling opportunity. I think it was. It's some of the biotech stocks have come off a little bit since then. I don't know. I don't see, could it go up to $68? Yeah. Could it go down to 62? Yeah. I mean, it's still in a trading range. So I don't think this is like you got to jump in, that Gilead's going to be moving. The thing trades with a low valuation, but they don't have any growth. So, it's been that way for a long time. That's a lot of the biotech story here right now, is we're still worried about drug pricing out there. So that's hanging over the sector as well. There's lots of reasons not to own these stocks right now. So I don't think biotech is like the place to be, at least right now. And I don't think Gilead is the place to be either. I think it just kind of hangs out.
All right, you got a quick blip over $66 to $66.48, but quickly gave that back. I mean, if you're looking at the dailies and you're not looking at the fundamentals, it has a chance to break out here. Pair of highs at 65.61. We are trading above that. I think I'd maybe get a little bit more. Maybe if it gets over 66 and well bid, it has a chance here. On the downside, I like $64 for support. 63.95 was your 3-day low. Dennis, 2 minutes here. You want to try and
I'm gonna go hop off, and this is always a bad thing when you didn't trade for a day and then you go try to trade jobs number, but I'm going to try to do it. So I'll be back with you in a few minutes.
Okay, Spence, you got a little bit of a preview here for the jobs.
Yeah, looking for non-farm payrolls of 181,000 new jobs last month. 196 was the previous month's reading. Looking for unemployment to hold steady at 3.8% and 3.8%, and average hourly earnings likely to rise to 0.3%. So 181,000 jobs and 3.8%. Those are the bogeys this morning. The jobs number.
I guess the only fear is too hot of a number here. Too hot of a number will put higher interest rates back on the table.
Unlikely, but yes.
Higher interest. I don't think rates are going anywhere. And I don't think anybody that thinks they're going down, they're not going down here. Just for looking at different issues, a hot number. Your TLT will go down. Your banks will go up. Banks are looking strong here. Not strong. I mean, they're trading up. Bank of America's trading up. You got JP Morgan trading up. So that's what's going to be on the number. For the technicals here, we're trading right at the highs of the session, 28.29. But I'm not gonna get real bullish here for the day until we take out 32.75. That was the high from yesterday. And also, if you're looking at any kind of retracement in the SPOOs here, we basically have had about a 60-point break here. So that's easy. Add 30. So right there, 29.34, 29.35 is halfway back. So we'll see how they react off this number. And I just messed up my quote page. How did I do that? Anyways, I got the ES here, the S&P June futures trading up $10. Job report is imminent, and they like it so far. A little bit.
263,000 jobs in April. Unemployment declines 3.6%. So 3.8% was the estimate. 3.6% is what we actually got. And the non-farm number, God, it's all coming through so fast now. 263,000 jobs is what I'm seeing, I think.
All right, initial pop 31.50. Now, if you had your offers out at 32.75, Thursday's high, you got a big nothing done ND on that one. So that is still an area to keep an eye on. Not really going down here, still holding the gains from the session, up 12 points, 12 and a quarter points. Not giving in, not as of yet. If we do fall here, 29.24 is mid-range on the session. So we'll see. Really, we are basically 2 points higher we were before.
Yeah, I'm back.
No way.
So we got the initial 4-point pop, and then we came right back in. So it looks like it's not a huge, there's nothing moving huge here. I do see the banks catching a little bit of a bid. They were up a little bit ahead in the print, probably just because the market was overall. So if you're looking for stuff that is moving, we're still hanging out here, though. So it's interesting. We popped 4 points, now we're back. We're actually down from where we were now.
We're
so
actually down.
Keep an eye. We're leaking here. We're leaking.
We are leaking. I'm not gonna throw in the towel on this rally today until we take out 29.24, and that's the mid-range on the session. But I think we're right back where we were before the number. Wasn't it 29.27, 29.28?
Right there, right at the number.
Wow. Well, Dennis, I guess you missed them. Didn't really miss anything there.
No, not too much movement here. So we are chopping around. Call this number chop because we don't have no direction really yet, although it's continuing to leak, so we're watching it closely. There was a bunch of other ones that reported here. I wanted to just cover quickly Cognizant, though.
Yeah.
Because the stock got the beats yesterday on earnings, I assume. I was away sick yesterday, so I'm assuming that was earnings.
Yeah, I'll read the number here as I pull the chart
This
up.
was from yesterday.
Yep. We're leaking. We're leaking. Mid-range on the session.
Yeah.
Yep. Be careful.
That fake out. Big fake out, eh? When we went up there to 2, we're down 7 points from the highs there.
31.50.
All right.
Keep an eye on that.
CTSH reported yesterday. I don't think we gave them
this yesterday morning.
I believe so. Yeah.
Yeah, because they had the trading.
Yep. 91 cents versus $1.04 estimate. Sales of 4.11 versus $4.17 billion. Light on both the Q1 numbers, and their fiscal year EPS guidance was also extremely light. They guided in the high $3 range versus a $4.44 estimate. And so you're seeing that was yesterday morning, and then
and they beat the stock all day. And the reason we wanted to highlight this was we always talk about analysts chasing price. This has got to be the best example I've ever seen of analysts chasing price. Give us the downgrades here.
I think I count 5 this morning.
5 downgrades here this morning.
Wedbush, JP Morgan, Goldman, Evercore, and KeyBank. And only one
all
of those
downgrading the stock. Another one's lowering the price targets here too. So analysts just ganging up on it. And this is the trade. I mean, when you see a big move like this from a stock that's pre-market, the analysts haven't had a chance. Imagine just shorting it overnight. You come in here this morning and the analyst just paid you. So I wish I would have been here yesterday because this would have been prime candidate to be short overnight at the close of 66.61, anticipating that you'd get a couple downgrades. You get 5 and the stock is down another 5 points. So that would have been the biggest payday from the analyst chase price strategy that we talk about on the show in a long time. That's just the way this thing sometimes work. I mean, you had it actually. Did it report during the day? I'm looking at. I'm just breaking down the intraday chart.
Yeah,
it looks like that move was during the day.
It may have been midday.
Why did they do that?
They said there was a leak. We're getting some people in the chat to saying there was a leak of the earnings.
It was definitely out before the close. I can tell you that.
Okay. So did they halt it then?
I
don't think it was halted.
I'm just trying to look. It looks like with about about 15 minutes to go in the day.
It was before the,
so then the official
close.
earnings come out and they're bad. So okay, I'm just getting caught up here on this because I was sick yesterday. Obviously, I wasn't here. But crazy move yesterday. All the analysts gang up on it this morning. So congratulations to the shorts.
This is why you don't release during the day. But I would note one of the ratings, only one of them, one of the 5 was to underweight or / sell, and that was JP Morgan. The rest are all to neutral for whatever that's worth.
In any regard. analysts chasing price all over the place here. So we know sometimes they're good, like Mr. Inch, who we're going to get on here in 10 seconds, and then sometimes they chase price. But let's go get Inch.
66.10 pre-market low.
All right, let's grab John Inch, senior analyst at Gordon Haskett. We'll be right back in a minute. And welcome back, everyone. As promised, we are now joined by John Inch, senior analyst for multi-industrials at Gordon Haskett. John, how's it going this morning?
It's going great. Thanks for having me on.
All right, so we had the GE earnings report on Tuesday. Give us your initial reactions to what was, I mean, I guess it could have been worse. I don't know. Give us your reactions.
It absolutely could have been worse. But it's very interesting what's going on right now because of GE's outsized debt and the high level of scrutiny that's being applied to its debt ratios and its cash flow. The narrative has shifted from sales and profits, the way you look at every other company on Wall Street for the most part, to cash. And what I learned a long time ago is analysts and companies do not know how to forecast cash because of all of the moving parts that go into the computation thereof. So what this does is actually leaves a lot up to the discretion of GE in terms of how they want to manage the cash numbers or the inputs. And I'll give you a quick example. They're supposed to be cash restructuring negative this year, or spending $2 to $2.3, $2.4 billion. Well, they spent almost nothing on restructuring and cash in the first quarter, despite the CEO talking about how urgent the situation was to tackle all of this stuff. So my point is that, yes, the free cash loss, interestingly enough, it was a loss, was seen to be better than the minus 1.7 they did last year. They did minus 1.2, but hundreds of millions of dollars of that could have simply been attributable to them not deciding not to spend money on restructuring. There's lots of other examples, but I think on the surface, you're right. It could have been worse. Below the surface, you start to analyze this stuff. It was not a great result. And I think, as you even said, hey, this is just one quarter. Don't extrapolate from this, which almost tells me they perhaps overplayed their hand a little bit in managing numbers ahead of expectations.
And so they're disposing of some assets here. You question whether or not, they are getting top value for some of those assets here. What else do they have? I mean, what else could they do? I mean, they obviously need to raise cash, bring down the debt. I mean, breaking down and selling assets when people know you need to sell assets is not a good thing. But what else do they have in the queue?
Right. Well, you're referring to the biopharma business they agreed to sell to Danaher, right? They announced that earlier this year. That business just put up 20% core growth and 31% core growth in orders. And if you look at the way Danaher and other life science companies have performed, it does suggest that, yes, GE is getting $20 billion of needed cash flow for the business, but it's really not getting necessarily a premium in terms of market. It could arguably be getting a discount. Now, what else do they have? Well, the CEO and CFO have both appeared publicly and stated that the rest of healthcare, so these are the traditional GE MRI, CT, PET scan machines that compete with Siemens and Philips, that stuff is no longer core to the company. So that definitely, we think, is going to be sold in piecemeal over the course of the next couple of years. That'll certainly bring in money. They own now, because they sold the rail business to Wabtec, they own 25% of Wabtec. They just filed to sell that, in pretty short order, and they still own about half of Baker Hughes. So all in, there definitely is a lot more money that can still come in the door. But what you're going to be left with is an aerospace company where they're the sole source engine on the 737 MAX. They highlighted that's an increasing risk in the quarter. A power business that structurally appears challenged because of the shift from fossil fuels to renewables, where GE does not have as strong a presence to make up for the lost sales and profits. And that thing faces just tremendous restructuring. And, then as I say, like a wind business that's mostly a land wind business where, the industry is increasingly looking to offshore and GE really doesn't have much of a product. Overall, though, I think that you could probably argue, given the narrative has shifted to cash flow and considering they are, in the throes of selling all of these other properties, people who were maybe concerned about liquidity and liquidity issues in, say, the fourth quarter, those have largely been moved to the side. Doesn't make GE a great investment, and I really think the markets are discounting a lot of good news years into the future in terms of today's stock price, but it maybe says this isn't necessarily going to drop necessarily in the short term.
John, Dennis Dick here. Just a question just on the sum of the parts. And, you're talking a lot of different businesses here with GE. And I can remember an analysis by Tim Seymour on CNBC last year, just talking about the sum of the parts. And he was arguing that this was worth $15 or $16 a share when you really break up the businesses and look at what they're all worth. What are your thoughts when you look at all these different businesses and just from a sum of the parts? Is GE, better to just start selling everything off and looking at it that way? What are your thoughts on the sum of the parts for GE?
Well, I really don't think that, if they didn't have all this outsized debt and concerns about no longer being able to access the commercial paper markets, which you really almost need to run a viable financial services company over time, doesn't really make sense to run it on bank debt. I increasingly think sum of the parts is not necessarily the way to think about it. But the fact is, people do look at it. Okay, so let's think about this for half a second. They originally were going to sell 20% of healthcare under the Flannery plan before Culp and give 80% to shareholders of healthcare. Well, now it looks like none of that value of healthcare is going to shareholders. It's all going to be sold off to pay down debt holders. So if you thought healthcare on some of the parts might be worth $3 to $5 in the past, it's now worth nothing. So all of a sudden, maybe your $15 was correct, but you're now all of a sudden down to $10, $11 because healthcare is no longer there. I think the other thing that people miss in some of the parts is they look at on-balance sheet debt exclusively. The challenge with that is GE has a lot of contingent or off-balance sheet liability to contend with. And I'll give you one quick example. Which everyone agrees, and GE has stated, they're going to owe $10 billion to insurance regulators for statutory insurance reserves for long-term care. That $10 billion, this is going to be spread between now and the next 5 years. That $10 billion, $10 billion, does not appear anywhere in terms of the debt or the liabilities assumed. So, to simply look at on book, it excludes potential litigation and very substantial lawsuits. It excludes the $10 billion of insurance reserves and possibly future insurance reserve requirements they're going to have to pay. It excludes a lot of things. And the fact is, we know we're right because this is driving GE to sell off prized crown jewel assets. So I think some of the parts was a fine exercise 1 or 2 years ago when you hadn't, John Flannery was still running the company. You hadn't seen this fire sale of assets. But now it increasingly is just going to come down to 3 businesses: power, healthcare, and renewables business. Oh, and I'm sorry, an impaired, financial services business that increasingly, they hope to break even in 2 years. Maybe it will, maybe it won't. It's really sort of a black box to a lot of folks. But, we even think it's going to require a lot of money to be put into that business. So some of the parts, if you were to add capital, you would actually have to ascribe negative value per share because of the cash GE is going to have to continue to put into it. And this isn't just my, expectation. They're putting in $4 billion of cash into the capital company this year. We think there could be another 10 billion. You start to run that with 8.7 billion shares, you're talking about $2 plus of negative value just for GE Capital. So no, look, it's fine that people do these exercises, but this is ultimately what analysts do, right? We actually focus on the details, read all of these statements, add it all up, and we're just not getting anything that looks, compelling at these levels.
We're on the line with John Inch, senior analyst, multi-industrials at Gordon Haskett. I just like when big news events happen, I like to look at the price. And on February 25th, when GE sold, that's when you had a spike to $11.29, and then it traded back down under $9, has recovered and to the $10 area, $10 plus. And if you look at DHR since that time, that stock gapped up on that day, put in a double bottom. It's traded up from 113.48, added 20 points, now trading at 133 at a pre-market over 134. So the street made their statement, and down at DHR definitely got the better end of the deal on this one. So that's just going with what you said. They probably could have held out for a little bit more. You did talk a little bit about setting some reserves. I mean, we heard accounting problems. I was not in on the conference call. Was there any update on that, or is that what you're talking about having the reserves for?
I'm just saying that the total debt that gets calc'd does not include the off-balance sheet debt, such as the $10 billion of insurance they've committed to putting into the business over the next 10 years. The way they look at, for instance, their pension liability is on a net basis. It's really not the way you're supposed to look at it. So I'm saying their debt is much larger than what you're seeing on book. That's all I'm saying, and there's no reserving for these contingencies. That's correct, and I agree with you 100%. They're selling Danaher for 17 times EBITDA. I'm sorry, they're selling their biopharma business for 17 times EBITDA. I think in an auction, they could have got 20 times plus for that business, maybe even a lot more. So sure, they're bringing in another 20 billion after tax. That's great. They have to do it because they need the money to pay off this mountain of debt they have. Otherwise, they're facing another downgrade by the rating agencies. The rating agencies, again, this is not my speculation. They have said this in print. They expect GE to kind of make steady progress, sell these assets, and pay all of this stuff down. And, unfortunately, it's a win-win. It's a great deal for Danaher. It's a great deal for the others that they're forced to sell these assets to. It just may not turn out to be a great deal for shareholders. And certainly it doesn't help your sum of the parts argument because shareholders don't see the proceeds. The proceeds go to pay off the bondholders. It's a win for bondholders. It's a loss for shareholders.
All right, real quick, John, before we let you run, your most recent downgrade was to 3M. Obviously, a huge disappointment in their earnings report. Give us a quick 2-second highlight on 3M and why you downgraded.
It was a huge disappointment. We had taken a shot on it because the company, after many years, has been implementing a lot of self-help initiatives to streamline its operations and plug a lot of its price gaps and, really try and run itself more efficiently. The problem is there had been, for the past year, telegraphed softness in automotive, electronic markets in Asia. China was obviously much weaker in the quarter. A little bit of softness led to substantial outsized profit losses for 3M. It's really inexplicable. It speaks to operating, mismanagement and possibly significant misexecution in the way they've put these programs in place over the past several years. And that's not a quick fix. Following this up, they've just announced that they are buying a company that was going to go public in private equity, Acelity. They're paying $6.7 billion for a company that, frankly, it's just it's not a compelling transaction at all. It looks like they're panicking and overpaying. So you couple all of this with the fact that 3M, along with DuPont, made these chemicals called PFAS, which that's sort of the reason that it was used in firefighting foam. It was used for anti-slip or slipperiness properties, right? Think of Teflon. Well, these products are linked to cancer, and 3M's litigation problems are just in the early phases of beginning here. So it may not be quite as severe as asbestos was that ultimately bankrupted dozens of American companies, but this is very unique to them in terms of this liability. There's a Netflix series or show out called The Devil We Know. It's a little tedious to listen to, but it gives you a sense of what the magnitude of the challenges are. So this company is going to face a lot of problems for a long time. This litigation, by the way, in terms of what they call PFAS, right? That's the chemicals. Remember, 3M's a big chemical company that they made. they don't break down in the environment, and it's in everybody's bloodstream, as scary enough as that seems. And if there's a link, if they find causal link to cancer, good luck with that. It's possibly lights out.
All right. Wow, that's a positive way to end this interview. John Inch, senior analyst at multi-industrials at Gordon Haskett. John, thanks for the time and have a good weekend.
Anytime, guys. Take care. Bye-bye.
All right, 8:49 here, Joel. Anything happening?
Yeah, we're itching back up here.
Yeah.
Oh, I didn't mean to make a pun like
That's
that.
okay. That's okay.
Anyways, pre-market high stands at 32 and a quarter. 32.75 was Thursday's high, so that's what I'm looking for continued follow through. Mid-range of the break comes right at 29.35, but honestly, folks, not a lot of resistance here in the 29.30 handle. And believe it or not, we traded all the way up to 29.61 and a quarter. That's the all-time high basis the front month contract, and that was on Wednesday. So that little break that we had after the report took you right to mid-range, and we've rebounded. So far, nice technical rally here in the S&P's up 13 and a quarter. Do we got some more earnings to cover?
We do, but I failed to mention this at the top of the show when we were talking about Beyond Meat. If you live near a Carl's Jr. or a Del Taco or a Veggie Grill today, Beyond Meat is so thrilled with their IPO. They're giving away free Beyond Meat burgers today at any of those.
Who are these places?
Carl's Jr., Del Taco, I don't know, go to beyondmeat.com. You can find more.
I gotta go.
You got to go, Joel. Today's your day. It's free. I know you love free food. So get that free Beyond Meat burger today. Their IPO was so good, they're just giving their product away for free. So awesome.
Nice.
Moving back to, someone had mentioned Herbalife. So let's talk about HLF here. This one reported yesterday after the close. Q1 EPS 66 cents, missed by a penny. Sales 1.17 versus 1.2 billion dollars, so a slight miss on that number. Their Q2 guidance was light, actually, and their fiscal year guidance for the EPS was also light. So light guidance here for Herbalife this morning.
Did Ackman ever get out of this?
Yeah, this one is way less interesting now that Ackman and
Icon's out too.
Are not fighting about it. Yeah, Ackman's out.
It's not even worth talking about it.
Yeah.
That was always the fun on Herbalife, was Ackman versus Icon. But if we're just looking technically, this thing needs to hold that 49.78 low. That's the low of the move from back in April. We are below that right now, so that is concerning. So it needs to get back up over 50. Otherwise, you're in breakdown mode and it starts to open up. I don't want to own it below 50. It gets back up over 50, maybe it gets interesting. But as long as this is below 50, I don't want it.
Yeah, 50.03 was your low last June, and then things really, next major support level I see is at 48. You had a pair of monthly lows back in April and May of 2018, 47.78, 48.16. So that's the next stopping point on the downside for Herbalife.
Planet Fitness, we're getting a request here from Thrasher in the chat. PLNT earnings, Mr. Israel.
I guess it's appropriate. We've talked about every food stock under the sun this morning, so might as well do the gym. Q1 EPS of 35 cents, beat by a penny. Sales 148 versus 153 million dollars, so late on that print. And they give guidance. They reaffirmed their sales growth of 15%.
So the guidance is fine, but expectations were high for this. I mean, look at the stock. It's been an absolute monster. Started 2018 out at $30. You're talking about a stock that's up 120% this year. So they needed to blow it away. They did not. That is why the stock was trading down. I'm actually surprised not trading down more, considering how much expectations probably were pretty high coming in. The stock has just been running all year.
What's trading lower at 430? It traded down to 67.96.
It gets a little bit overdone.
Yeah, so it's 5 points above that. So if you're coming in now and you're saying, wow, it's bad, it's down $3, it was down $8, and you are trading at the high of the rebound right now. And so I will call 72.50 resistance here. That has been the high in the area of the last two brackets. In order to get to the bottom of yesterday's range, which I don't think is going to happen, that'd be 73.62. So maybe if you're trying to wiggle out of this one on the long side, maybe 73.5, get ahead of that gap fill. On the downside, just a slow incremental rally up. I see support. I see some lows at 70. Those are two daily lows, 69.77 and 70.12, April 8th and 9th. So $2 down here, I'd see support. Don't think we're going to see that pre-market low.
A bunch of other stock. First Solar?
Oh, wow. That was not on my list. They reported, yeah, look at that. Wow, I missed that one.
Yeah.
Q1 EPS, 64-cent loss last quarter. I don't know how much
They always lose money.
This,
Okay.
you know what? That's not true. They make, they lose. They make, they lose. Inconsistent is the name of the game
Right.
here. And who was the analyst that we'd always bring on here?
Gordon.
Obviously,
Gordon.
yeah, Gordo.
Yeah.
Gordon Johnson. I mean, we're always interesting to find what his take is on it too. But this thing, it's the earnings are just not consistent. Maybe that's the nature of the beast in the solar industry here, and the way they account for them. But earnings are always all over the place in this thing.
Yeah, their EPS. I mean, they lost 64 cents. I don't even know if that compares to the 9-cent loss estimate. Their sales numbers were fine, 631 versus 623 $million. They did raise their sales guidance for the fiscal year by $250 million. So
we know guidance is more important typically, so maybe that's why the stock is trading up. I've wanted to own this thing for a while. I wish, and I talked about owning it at $48.50. I never bought it, never pulled the trigger, and then it ran. Got an upgrade, I believe, from Goldman in there too. I don't know. It's been a consolidation station here for a while, so it gets interesting if it starts to break out and make new highs. Say it gets above 63.
Yep.
That's where it gets interesting for me. Until then, it's just kind of hanging out and bull bear debate here on which way it's going, and that's what's happening lately with the stock.
Big level 62.65. Well, actually 62.66 was the high of the rebound. 62.62 was your high on Wednesday. So there's your major resistance, only trading at 61 on the downside. Bulls need to defend $60. Yesterday's low, 59.75. Your April 25th low, 60.23. Spoo's making a new high. We are taking out the high from yesterday, or not by much, 32.75. So we hit our first objective on the upside.
all right.
Before you do your derby, can we talk Tesla real fast?
Yeah, I was about to bring up the Derby and Tesla since we have some news on that this morning. A filing,
Yeah, what's going on here, Tesla now?
Filing shows an offering of 3.086 million shares at $244.10 a share. Elon had indicated interest to buy up to a little over 102,000 shares for himself for 25.
Looks like he upsized it a bit too.
Yeah. So to repeat that, about 3.1 million shares is what the offering is for, $244.10.
Well, they're down 2 points. Whoever's buying on that offering right now, because you can buy it cheaper in the open market at $242.50. It was trading $247 here in the pre-market, so we are starting to leak here fairly significantly in Tesla. I don't even know what to say in Tesla here. I mean, I get chopped up in the stock here too. It's a tough one. I day trade okay, but I cannot swing trade the stock. So, Joel, I'll leave it up to you because I'm terrible at swing trading the stock.
Yeah, you know what? We were talking about this one yesterday, and it had the pop, and I'm like, well, 238's too low. And they had it jacked it up to 247, and then lo and behold, they came down in the regular session. I think 237.92. 237.72 was the low. So, man, oh man, using those numbers you said as as like a tractor beam, that worked out really well. And now they bumped the price up here to 244.10. So you kind of saw that in the works yesterday at 243. So the market gave you a little clue that price was a little bit low.
All right, it is 8:58. Joel, you have the floor. Where should we put our money for the Derby?
Where you should put your money? Well, Triple D, the favorite's out, Omaha Beach. He has a breathing problem, so
breathing problem.
Yeah. So he's
Can
scratched.
we give this horse some puffers or something?
I'm not sure what, but he's out, and he had another thing going for him because it's due to be a sloppy track. But I like to pick the winners of the Derby props, and the winner of the Florida Derby was Maximum Security. Well, when I was looking at him, he was 12-1 on the morning line, and they've cut that in half. I sure hope he doesn't go off as the favorite, but that horse could have been claimed for $16,000 in December. You could have went to the track and gave someone $16K, bought that horse, he'd be running in the Kentucky Derby. So
wow,
not a great pedigree. He is undefeated. He has a hot jockey in Luis Saez, who's been tearing things up at Gulfstream. He's won a lot of grade 1 stakes. He's never won the Derby. So I think he's due. I like the 7-8 post position that he's in. So he can the horses to the outside, he can make them, run hard to get to the front and then have some room in the stretch. So I'm going with Maximum Security. I'd love to see him at double-digit odds. I'm going to be coupling him with Tacitus, and Tacitus won the Wood Memorial. You got to watch that race. The horse came from way, way, way back to win. So he showed late speed. You need that in the 1.25 miles in the Kentucky Derby. So there you go. Maximum Security on top with Tacitus. And, Baffert has 3 entries in there. He won the Triple Crown. So you could see a little shenanigans out of him with the 3 different entries. But I like the name, going with Maximum Security.
And
that's your picks. That's from the Derby expert here, our resident Derby expert, Mr. Joel Elconin.
Well, on that note, that'll do it for today's show. I want to remind you that Joel, Dennis, and myself, as well as many other traders that you would like to meet, are going to be at the Benzinga Trading Summit. Frog in my throat. June 20th in New York City. Go to benzingatradingsummit.com to learn more. Enter the promo code PMP15 to get 15% off any ticket to the conference. I want to thank our guest today, John Inch. Thanks to all of you in our chats. Please remember that all the information from our show is for informational purposes only, not meant to be investing advice. Any last words, Joel?
I'm talking to Tricky Nicky Shaheen, trying to get him out there for the event as well, so we can get some options trading in there as well. And I got working on a few other people, so it's going to be fun. I'm looking forward to it.
Everyone have a good weekend. Good luck in your Derby bets if that's your thing. We'll see you on Monday.